Hello, good morning in Europe, good evening in United States. This is Ahura with another daily outlook and review the market. Uh, as you know, in this series of video, we are looking at the market, what's happened, what is going on, and what is our expectation for today's in the financial market. Let's go and see what happened yesterday. As I mentioned yesterday morning in yesterday's outlook, all the focus yesterday in the market was on FOMC meeting. Finally, we had FOMC meeting minutes. FOMC meeting announcements and Mr. Powell's press conference. What happened yesterday and what they decided yesterday exactly was the market expectations. Yesterday morning, we talked about increasing the tapering level up to $30 billion per month. Yesterday, we talked about uh, at least between two or three times rate hike for expectations for 2022. This is what exactly happened. Interest rates expectations for 2002 and 2022 and 2023 is increased to 0.75% and 1.25% for 2022 and 2023. So it means that next year we will have three times increasing interest rate each time by 0.25%. This is the expectation. It's not the final decision. Based on the dot plots that we had from Federal Reserve. Also, tapering level will increase to $30 billion per month from January. So, which it means that in the mid of March 2022, the Federal Reserve asset purchasing plan will be end. And as Mr. Powell told and answered in the questions in the press conference right after the meeting, there is no reason to have a long gap between ending the Federal Reserve bond purchasing and starting the interest rate hike, because economy is good enough, powerful and strong to go forward with no help from the Federal Reserve. But with such a hawkish policies, what happened? Why stock market increased? Uh, Me and so many analysts like me, we were waiting to see dovish. We were waiting to see the viewers in the charts after such a hawkish policies. There is two reasons for that. Uh, First of all, what I actually, the personally, was not thinking to have, it was such. I have it here. It was. I wasn't thinking about such amazing economic outlook. Look at here. Uh, the in the outlook that the Federal Reserve gave 2022 and 2023 for 22 and 23, look at the GDP number. Expectations for 4% for next year and 2.2% for 2023. Uh, but the Federal Reserve inflation expectations for next year is down to 2.6% from current 5.3% PCE, and down to 2.3 and 2.1 next year, 2022, 2023, and 2024. These great expectations for such a low inflation numbers with the unemployment rate at 3.5%. The expectations that the Federal Reserve gave is great and huge. It means that economy is strong, is very strong. And this outlook that the economy is very strong was the reason to see the bulls in the market and honor again. So it means that the Federal Reserve doing whatever it can to support the bulls in the market. They do not want, in any case, to lose this positive sentiment in the market just because of some changing the policies. They are bringing thousands of the reasons. And they do whatever they can to hold this positive sentiment in the market to help the bulls. They don't want the people to lose their money in the stock market, to become disappointed from the situation. Therefore, whatever we can see here, whatever we can see in the charts, is the bullish. But but don't forget, after the FOMC minutes, we didn't have a market to run too long. So today we have to wait for the stock market to open. We have to wait for the Wall Street to open and see the real reactions. Let's go to the chart. Uh, that's me. Where is this photo? Okay, let's go to the chart and see. Sorry. See what's going on in the chart and what is the expectations from the technical point of view. Oops, here we go. From the technical and more fundamental data. Okay, it's ready now. So here's the US dollar chart. With such a hawkish policies, we were waiting to see the US dollar in much higher levels. So the market was expecting the same thing. So it means that there was not surprise for the stock. There was not surprise for the investors. So US dollar fell after first initial increasing. However, the policy is hawkish. Even if the economy is great, the policy is hawkish. On the other hand, economy is great. So the economy is great. The policy is hawkish. It means that still we should have the US dollar strong. So therefore, the US dollar is still above 96.40 with all what happened in the market, and it is going to be strong. So from the both fundamental and technical point of view, US dollar is strong and going to stay strong there. But the gold, weaker US dollar last night ended with increasing in a gold chart. But US dollar is not going to stay weak. With great economic outlook, US dollar increasing. With hawkish policies, US dollar increasing. Therefore, everything is in the favor of US dollar. So the market bulls should be limited somewhere in the chart, because this increase was the only reason for this increase was the stronger US dollar. Look at the VIX chart. The VIX chart is showing that the market risk is much lower than what we started the day yesterday. Almost 3 points less than what started from yesterday morning. Therefore, the market risk is low. We don't need this safe haven. US dollar stays strong. Yeah, this red candles was the reason of this white candles. But as I mentioned, US dollar is not going to stay weak. US dollar is strong. Therefore, the gold bulls doesn't have enough reason with such a great such a strong US dollar. Sorry, with such a strong US dollar and low market risk. On the other hand, the crude oil, okay, let's go to the crude oil before going to the stock market. The crude oil was positive. Economic outlook was amazing. Economic outlook is incredible. Increasing economic GDP, increasing labor market, and down to have I mean, 3.5% in the US means full employment. Unemployment at 3.5% means full employment. Full employment means that economy running great, economy is moving great. Therefore, the outlook for demand, energy demand in the market is positive. Therefore, we should have to use a strong oil. Pools for the oil are increasing. But there is the only reason, that there is a thing, there is a thing. Still, if we have the same movements in the market, we will have the inflation is increasing still. However, what Mr. Powell was talking yesterday is that strong economy with a strong employment market, labor market, they will be the reason to to push the prices down next year and to have the lower inflation. That was the reason. I mean, lower inflation expectation from the Federal Reserve was because that they are expecting to see economy much more stronger. So that was the reason to see the oil also increasing. And about this S&P 500 and other stocks, as I mentioned yesterday after the announcement, we didn't have too long time to have the real reaction to the market. So today, when the cash market opens in the Wall Street, we will have the real reaction of the stock market. The SP 500, Dow Jones, and this Nasdaq, and this Dow Jones chart. All of them they increased. Also, kind of they erased all the losses of last 3 days. This is the Dow Jones. This is the Nasdaq. Look, past in the past 3 days, whatever they lost in the past 3 days, they regained. Same thing for this for S&P 500. Whatever they had lose in the past 3 days, yesterday they gained. So they are at this. They are gaining at the same level of what we had in the beginning of the week. What we had in the on Monday. So like Monday, January 13. Well, sorry, December 13, we had this higher numbers here, and the same numbers are almost we got back to at the same level and the same numbers last date. Today the cash market should be open, and we have to wait for cash market to see the real reaction of the stock markets. But however, with this economic outlook, the bears is so unlikely to have enough power to go down more down. So it means that we had enough correction in the last days, and it's not going to see we are not going to see more corrections here. So still outlook is positive for this for the markets. This is for our expectations for stock markets. About the Bitcoin and other cryptocurrencies. What is the expectations for what is the expectation inflation expectations to be low? It's not in the favor of Bitcoin, and overall in the general for the cryptocurrencies. Expectations. Federal Reserve expectations for inflation. Sorry. Sorry. Federal Reserve expectations for inflation is so low. Therefore, we can see we can see the numbers. It can put the more pressure on the cryptocurrencies market. From the technical point of view, finally Bitcoin could pass the trend line, but still couldn't stay long at that above the trend line. If they cannot support the position, cannot hold the position, and again fall back under this line, under its trend line. Look at here, the trend line. You can find it in your daily chart. Again, if it fall under that, we can see the downtrend it falling. In the daily chart, we are still in a downtrend. In the H4 chart, the RSI moved above 50, but that's a 53. It doesn't mean that it has a powerful to go forward. It has strong to go forward. Strength will get above when it is RSI is above 55. So right now it's 53, so it means that still expectation is flat with the downside tendencies. For the Ripple, same thing happened. For the Ethereum, also same. I mean, the market reaction yesterday was the same. For kind of cryptocurrencies market reaction was the same. On the Eurozone, today we are waiting for the ECB. Today, the ECB's meeting, we will have the ECB meeting, we will have the Bank of England meeting, and we will have Swiss National Bank meeting. Where is the USDCHF? USD card, USDCHF. I can find it, USDCHF. Okay, I don't know where is that. Anyway, we have the Euro USD chart here. Market, look at here. The US dollar just increased and fall. Euro USD fall and increase, and now it's flat. Anyway, US dollar outlook still is a positive. So still we are waiting for the stronger US dollar. And for the economic outlook for the Eurozone economic outlook and meeting minutes, we have to wait like 10 hours. After almost 10 hours, we will have the meetings of ECB's results, the result of ECB meeting. Then we can decide much better. Today's expectations from the Central Bank of Europe is to hold the position with no change in interest rate, with no change in its asset purchasing plan. This is the overall market expectation, even if the inflation is increasing in the Eurozone, but still we are not waiting to see any changes. But in the UK, in United Kingdom, we are waiting to see a little bit more hawkish policy from the Bank of England, which it means GBP USD or the cable should be positive today. So we have to wait for correction here from after some some days, sometimes downtrend. So we have to wait for the correction here and start the uptrend from these levels for the GBP USD, especially if we got what we were expecting from the Bank of England meeting to be more hawkish. USD JPY with the stronger US dollar, USD JPY is increasing. However, the target, the 114.20 is the limit, is the main 114.21 is the first resistance, is the main resistance and the first resistance. And if we can we can pass this level, we can see again 115 in the spotlight. Otherwise, under 114, we are still in the side movement, and we have to wait for 113.20 to bridge down to have the bearish. But however, above 113.20 and 114.20 is the side movement, somewhere around this level, somewhere around here, between here and here is the side movement. So here is the general what's happening in the market today. So therefore, in the economic calendar, as I told, today we have the ECB meeting minutes and GBP and the British Central Bank BOE meeting. So ECB meeting and BOE meeting are the main data of the day, main events of the day. However, we shouldn't forget this is Thursday. We shouldn't forget about the U.S. initial jobs claims, which is very, very important. Housing market data, like we have building permits from United States. We have Philly Fed expectations, economic expectation and outlook. And yeah, but on the data today is the market. Today is the PMI data. Markets will publish its purchasing manager index data today from almost all the developed economies. We will have it from yeah, we will have it from France, we will have it from Sweden, we will have it from Italy, we will have it from Britain, we will have it from Eurozone, Spain I told, right? Yeah, Italy, we will have from all the developed economies, almost we'll have it from all almost developed economies. So far we had PMI numbers from Australia. It was service PMI down to 55.1 from 55.7 of last month. And we had a GDP expectations, GDP numbers for the quarter 3 from New Zealand. Oh, the New Zealand quarter 3 GDP fell by 3.7%, a little bit less than 4.5% of expectations, but still it's down. This is the general what's the main numbers that we have to wait from today. Australian unemployment level fell to 4.6% from 5.2% from October. October number was 5.2%, and November unemployment level is down to 4.6% according to today's data that's published. So this is the general market outlook and market expectations. Hope it was useful for you. Hope you used that. If you have any idea, if you have any comments, please let me know in the comments under this video. I will be back to you tomorrow again. See you guys tomorrow. Bye bye.